right. I'm going to title this to say Talking Crypto Markets and AI Coins, etc.
There you go.
Just to give it a title. Here we go. All right. It says we're live. Welcome. All right. This is our second live stream on Twitch. We're going to talk a little bit about what's happening in the market today, this week, and well, hold on a second. I got to mute it on this side. So, okay, yep, we're live, good to go. All that's flowing. The data is flowing. Welcome, Josh. My name's Ted. Welcome to the Crypto Flight Path. This is our second live stream. If you end up missing this and you're watching it later, for all the hungry masses, you'll find this on YouTube later on. But welcome, Josh. Start us off today and what you think we
Yeah, hey
should talk
Ted.
about.
Yeah, no. So it's been an interesting couple hours. The crypto markets are fun because there's always some kind of news going on. I mean, some of the things that we noticed today were the AI coins are pumping, and we kind of probably want to talk about why these narratives in crypto happen and kind of how to approach that if you're new to the space. I know for me, when I first got into it, you would see something pump 30%, and then you'd say like this thing's going crazy, and without fully understanding why these things get hot and why money rushes into them, the chances of you making money after something's pumped 30-40% probably not great, right? Like, so talk a little bit about the psychology and mindset behind that. And then I guess to get started, probably talk about some of, the macro events happening, and then, real quick go over that. And then some of the news things happening. Nick Carter had an interesting tweet today that, I'd like to go over and discuss. I think it's important to understand some of the headwinds facing the crypto industry. So that's all that I had on the agenda today.
Super. Well, I'm going to flip over to Nick Carter's tweet and, whoops, sorry. Forgive me, I'm still a noob with the controls, but what the viewer is going to see is the Nick Carter tweet, and I'll read it just to be smarmy. It says, I don't want to alarm, but since the turn of the year, a new Operation Choke Point type operation began targeting the crypto space in the US. Okay, and it's a well-coordinated effort to marginalize the industry and cut off its connectivity to the banking system. And he says it's working. And I have some thoughts on this. I'll let you kick off from your perspective what you think he's talking about, and then I'll add some color and clarity in some of the contexts that I've been experiencing this directly.
For sure, yeah. And we reference Nick because Nick's been in the space for a while. I think Nick's fairly well respected. I enjoy his views. I think he comes in with a pretty honest and intelligent viewpoint on most things regarding the space. So when he says something like this, you kind of pay attention to it, just because, as you mentioned, you've had some issue with it. Shockingly, from my perspective, I've never had an issue with this at all up to this point. The banks that I work with regarding crypto are regional banks. Something that I kind of, I guess, I'm trying to think of the right way to say this, thought about when I got into this. Like, I don't, if you were to ask me if the head of JP Morgan Chase, Jamie Dimon, gets up and says, Bitcoin's stupid, right? Or Bitcoin doesn't matter. It's one of two things. Either he's malicious or he's ignorant. And you don't know which one is worse, right? Like, both of them are equally bad. And I don't believe he's ignorant, right? So why would I, as a crypto enthusiast, a crypto trader, crypto investor, put money with his bank to connect to, my exchanges? You just don't. I don't think that there's anything good that happens with it. That being said, I don't know of any issues that have happened with Chase. But from my perspective, kind of what I've done with this is I've kept money connected at regional banks because I believe that they're going to be somewhat stronger in the case of, some sort of CBDC or some sort of tragedy. I don't know that they're as exposed to the derivative markets, and maybe this is something you can elaborate more, Ted. And this goes all the way back to the macro that we keep referencing in some of these headwinds that, face. And again, this is why it's so important for people to understand how our money works in regards to crypto, because it all affects it, right? And the main thing too here is if they're doing this, and if Nick's tweet is accurate, it tells you two things. One, it tells you that they're worried about crypto, right? And they can't come out and actively admit it, because a game theory is the second they say they're worried about it.
Ooh, is it reconnecting? Oh, darn it. I think I lost him. Well, while we're waiting on Josh to reconnect here, I think I'm pulling up my phone because there's a Facebook group that a friend of mine had asked me to take a look at. And what the important piece was is that it looks like there's a Chase credit card was preventing this person from buying crypto on some exchange or like an Exodus type fiat on ramp. And let's diagnose a technical difficulty here with Josh's.
All right, I think that was my network. But
Well, it's
sorry
all
about
right.
that.
Oh, no problem. You're back in the saddle now. I was filling some of the air uh, with something that struck me, or the fact that we're talking about this was not shocking to read. Like when you sent this to me to take a look at prior, I was not surprised. And I want to reference, and this is showing up on a random Facebook group from someone I know asked me to take a look at this thing, which is wholly irrelevant. Like the thing itself doesn't matter, but what is really, I was really surprised to be able to find so quickly. It said, this person's trying to buy USDT on Exodus. I said the person's trying to use Chase credit card, and somebody wrote back and said, if you're trying to use Chase credit cards, they don't allow the purchase of crypto. And someone else said, yeah, it'll be a bank issue. And they thought there was some technical problem with crypto, and it's like, no. The crypto is working fine. Bitcoin network is working fine. Ethereum is working just fine. All these other networks are working just fine. The choke point in this case and the issue is with the issuing bank that you're trying to leverage to make a purchase. They're deciding on your behalf that they're not going to allow that transaction to process because of what you're buying. And so, where do you draw the lawn is the lawn? The line is being drawn, and it's interesting to see this start to happen at the micro level with individuals having experiencing these particular challenges, and it's really confusing for them, from what I can tell in this no-name group that has like 20 people in it. But anyway, I think it's interesting that this popped up, and it's interesting that this popped up. So tell me, Josh, from you've been working mostly with regional banks. I'm kind of the same. I've had no problems with of this sort, but I think it's interesting that the J.P. Morgan Chases and the Banks of America, like the bigger banks, I think it it's a big deal that they're wielding their weight in the way that they are, at individual consumers, basically preventing law-abiding consumers from spending their money where they want to.
Well, the interesting question when it comes to these big banks is the tail wagging the dog, or is the dog wagging the tail, right? And so who's really in control of all this stuff, right? There's you got to remember too, there's so much power involved in both DC and these big banks and lobbyists. I mean, I don't take anything any of these senators say seriously, especially like somebody like Senator Warren. I mean, she is the example of bought and paid for. Uh, but it's hard because as a crypto advocate and somebody that's an enthusiast in the space, we're just two random guys on the internet, right? We don't hold political office. We don't yield the power of a Jamie Dimon, right? Like, so why would the individual who's found this stream or found this YouTube, why would they take anything you or I have to say serious when you have Jamie Dimon or these senators out there saying, oh, crypto's bad, it could destroy the banking system, right? And so I think that's our challenge, is to kind of give people the resources, because you shouldn't listen to me and you shouldn't listen to Ted or anybody for that matter. You should do your own research and go out and figure this stuff out for yourself. And so that's what we want to help you do, is point you in the right direction of the resources to do that. And it's like we talked about yesterday. It's so important that people at least understand how their money works, and that way they can make a decision on whether they think the crypto assets, Bitcoin, let's just keep it with Bitcoin for starters, right? If that's an alternative to put a small percentage of their net worth to get away from, these banks that are saying arbitrarily, we don't like what you're buying because you don't have the same political opinion. Well, that's fine to the extent it's been so far, even though I don't agree with it. But what happens when, you have too many beers and, or too many pieces of meat, or who, like you said earlier, where does the line, who draws the line? And so, I'm kind of rambling here because it's a big topic and I'm glad we're covering it, but, I think you could talk about this forever. My to answer the question, I've used regional banks because I have relationships with the people at the banks. I've known them for years. They're my friends. They understand what I'm doing. I'm very direct and clear what I'm doing. There's no ambiguity like on what I'm doing with my money. I should have to explain it to them, right? And they've not asked me to. Just when they're interested, I tell them, right? And so I have a real issue with these big banks saying that you can't spend your own money. I mean, if I want to go out and buy, 300,000 bottles of liquor, nobody's going to stop me, right? So what's wrong with me trying to buy?
As long as you're paying, as long as you're paying the tax that flows back to the appropriate agencies, which flows back to the appropriate people. Anyway, I'll touch more on the political nature of this but keep going.
No, yeah,
Good example though.
yeah. And so, why should we worry about this? Well, if you're not in crypto, you kind of look at this and you probably think it's not a big deal, but it is a big deal, because if they can limit your powers to purchase with your own money an asset, and let's just stick with Bitcoin, that is about individual sovereignty, that's got a finite, a finite supply, that is something that we believe every human on the planet has the right to own. Why is a bank telling you you can't use your own money to buy something like that? Like, where is that? I guess it's probably, Ted, honestly, it probably is in the stuff you sign with these banks when you put your money in there. That's the thing we can talk about too. When you deposit your money in a bank, regional, uh, or one of these big five banks, you don't own the money anymore. You have an IOU from the bank, right? They own the money. They lend it out. I mean, that's a whole other avenue we could go down to. And maybe we should do some further research on this, but like, I imagine that it is probably in the terms of their contract that we sign with them that they can prohibit you from doing this. I don't know. Do you have any color on that?
I have some color. I know that there are like the banking industry is heavily regulated by the federal government and all the government agency apparati that are tasked with uh, maintaining the political posture that the federal government is here to protect consumers. If you're an American citizen, the government is here to protect you from the bad guys and gals in the world who would seek to try and mislead you, sell you snake oil in a manner of speaking. Uh, the real challenge, or one of the challenges that I think that crypto in general, Bitcoin being the biggest one or the one with the largest target on its back, politically speaking, is Bitcoin, because it's really easy to reference all of the really unfortunate things that have happened. People can launder money with Bitcoin, yes, but if you let's talk about laundering money. Do some Google searching and look at all of the major big banking institutions that have been caught laundering money, not just in the US, but around the world, and how many billions and billions of US dollars they've had to pay in fines in order to keep operating, and no one went to jail. So the politically speaking, it's it's a waste of your time to try and take a bullhorn and go to the masses and say, listen, yes, so a handful of individuals that are statistically insignificant considering the number of total individuals that walk planet Earth. Yes, that number of individuals have laundered money using Bitcoin and other crypto, but it's just as easy, if not easier, and in some cases, it's people will turn a blind eye inside the fiat banking system to facilitate orders of magnitude in US dollar terms of money laundering activity that has been able to fly under the radar for decades in some cases. And it's only after some sort of political upheaval or some sort of major mainstream media event that brings unwanted attention. It's at that point beyond is when the the judicial aspect or the punitive actions follow, and you learn, for example, that Wells Fargo allowed the drug cartels by way of shell companies inside Miami and in Cuba and in South America to funnel billions and billions of paper US dollars that were gained from selling immense quantities of illicit drugs to people in the United States. And the cartel members have literally shipping containers full of quote unquote dirty drug money with literally blood on it in some cases, being able to take that on a truck, drive it through downtown Miami, back it up to the loading dock of a high rise, and have it unloaded and then deposited into accounts and then wired to other accounts, either domestically or to foreign accounts offshore, Europe, like offshore in the Cayman Islands, for example, or overseas in Europe or over in Asia. London, there's a great documentary, mini doc on YouTube that I would love to be able to go find again, that I watched about how the Russian oligarchs and the nouveau riche in Russia have taken over London and the financial system in London, and how easy it is to launder dirty money and use it to and do things like purchase luxury real estate, like 20, 30 million British pounds worth of real estate at a time, and there's no requirements to register the beneficial owner, and it's the easiest, most effective way to launder money in the world if you have the means. It is no way, shape, or form any less evil than laundering money with crypto, but people get away with it every day of the year. Even now, February 7th, 2023, at it's 11:49 Eastern, there are people, unsavory types perhaps, remains to be seen if they are. I mean, my opinion of them doesn't matter. It's the behavior and the action that's taking place. And the circle is back around. It's easier from a political standpoint to point the finger at big bad Bitcoin and defer the mass public, like the greatest number of people in the public's attention tends to sway in one direction or another. It's been very easy throughout these media cycles to vector the attention around, oh well, Bitcoin's climate, this, that, or proof of work fundamentally is dangerous for the environment. Yet all of the all of the folks that went to Davos for the big meeting where the financial elite get together and tell us all how we need to live our lives and what we're allowed to do with our money, they ran out of places to park all their private jets, which belch. See, I personally don't care. I think our society wouldn't function without hydrocarbons. I think electric cars are great. I think the internal combustion engine is also critical, has been critical to our development as a society over the last 100 years, and it will remain a not just functional but necessary component. And hydrocarbons are not going away, in my opinion. Whole nother can of worms. But you understand how politically divisive these topics are, and you get some media focus on Bitcoin, for example, about how it's the anonymous folks can launder money. Yet, if you really do your diligence, do your own research, and look at how, like, the volume of cash that's been laundered. I'm not condoning money laundering in any stretch. So make not that mistake. What I'm trying to suggest is that the traditional banking fiat money system that we have today and the big players in it have been able to get away with orders of magnitude more bad behavior because of all of the palms they've been able to grease for people to turn the blind eye. And circling this back around to talk more specifically about what I think what's happening in the U.S. financial system is that when you go to a bank like a J.P. Morgan or like a Chase or a Bank of America and you open an account, in order for you to facilitate having access to your money, you have to agree to the terms and conditions. And I mean, when's the last time any of us really read all 85 pages or 120 pages of terms and conditions? We didn't. So some of us are surprised when we do something and they say, well, it's our policy that we don't allow this. So that aside, the reality is that some banking institutions are going to stand behind policy. And sometimes, I mean, in my own life, I've had to do this where I didn't necessarily want to, but because of the circumstances, you have to hide behind policy. And it's unfortunate. But in this case, like the example I was alluding to in this Facebook group, Chase, the credit card issuer Chase, is standing behind policy that they don't facilitate credit card payments with crypto, which is their policy. And what's really going on here behind the scenes that I think is the credit cards or banking functions are all about transaction and transaction volume. And the reality is that banks make enormous sums of cash facilitating debit card transactions, credit card transactions. And I mean, I challenge anyone here to take 10 minutes one day, look at your Amazon purchase history, tally up the number and think about how many swipes of the credit card that was, and think about how many millions of Amazon users there are, and think about like what the average credit card transaction fee or what the average yield for the issuing bank is in terms of profit from that transaction. And then it'll help you understand that the fundamental threat here is that these open, permissionless monetary networks facilitate low-cost low-cost functionality for people like you, Josh, and I, Ted, to be able to send money between each other without a third party that is a for-profit business finding new and exciting ways to scalp a portion of get their piece of the pie is probably an easier way to say it. That the banks just haven't figured out yet, and until they do, they're going to probably continue this posturing. And what I'm trying to say is, until they figure out how to profit at a transactional level with these open, permissionless, or sometimes permissioned payment networks. I guess the simplest example to talk about a permissionless open monetary network is base layer Bitcoin and then Lightning layer 2 on top of it, where there's virtually no cost to transact at the Lightning layer and then do your final settlement back on chain. And if you don't know what any of that means, we'll talk about on chain versus Lightning layer 2 and then even layer 3. But the point is that there's a very small number of very big financial institutions that handle the lion's share of payment transactions across the major networks like the Visa network, MasterCard, Discover, even American Express. If you take 5 minutes, Google how many Visa transactions that transpire every 24 hours, you'll get an idea of just how lucrative this is for the business. And all of this crypto stuff and the way it facilitates open, borderless payments between people is a direct threat to the Western Unions, the JP Morgan Chases, and all of the easy money transactional business that these institutions rely on. That's a really long-winded way for me to say that the industry sees the threat on the horizon. You know, the Kodak didn't pivot in time to make a digital camera and went the way of the dinosaur. And Xerox, another great example. Uh, Blockbuster Video got their lunch eaten by Netflix, who ironically enough started in the mailing DVDs, but then they pivoted. And what I think would be, I mean, I'm not telling the banks to do this because politically they probably won't, because they have big shareholders that like the money that they make. They don't want to rock the boat. There's no need to facilitate lower cost transactions because that eats up their margin, and it's literally just will destroy a statistically significant portion of their income. So the easiest thing to do right now that doesn't really cost them anything is to fund media campaigns and to start making it difficult for people to make transactions so that they get scared that they're going to lose access to their money. So I better not break the rules. And that's
So
my
essentially, yeah,
soapbox
no,
rant.
and I think that was very well put. You had some great examples in there, and it all makes sense, right? So, kind of after listening to you talk about it for a little bit, maybe what we're talking about here is as simple as incentives. These banks don't have incentive to promote crypto, and they're not going to. Jamie Dimon's going to call Bitcoin stupid because he can't make money off it, right? And anything you can't make
Mm-hmm.
money off of is probably stupid to these people, right? Because they've been in a position for so long, they've pulled all the strings and controlled everything. And now you have this new technology comes out that nobody can control. These guys can't go out and buy Bitcoin. It just doesn't work. They can't buy enough of the supply to control it. Now we can talk about some of these proof of stake coins where there are arguments that you might see the Wall Street types and the banks kind of gravitate towards some of these proof of stake coins because you could make the argument that, yeah, maybe they could get control. But again, not for you and I to decide. I don't really care. That's not what we're trying to talk about here. I don't have any interest in getting in the middle of Bitcoin versus Ethereum versus proof of stake. I think competition for currency is fantastic. I think it should happen all day, every day, and it should happen with the US dollar. And so I guess kind of putting a bow on this part of it is when we see stuff like this, it's important to recognize that yeah, the big banks and the politicians are going to bark. But at the end of the day, if Bitcoin is what we think it is, if these digital assets are what we think they are, there's nothing to worry about. And all this creates is a short term opportunity. Or if they want to scare people, we can acquire cheap sats. And it's like the Federal Reserve. And we talked about this a lot, Ted. If these markets want to fail to understand what Bitcoin is and give us cheaper Bitcoin, I'm not going to complain. I still can't believe that we can buy Bitcoin for US dollars. And maybe we can talk about the DXY real quick. Everybody wants to talk about the dollar index, and the dollar's gaining strength. Well, the dollar's gaining strength against what? If I give you a plate full of 5 turds and you eat one and you say this turd is better than the other turd, there's still 5 turds. It's kind of what the DXY is, right? Like it's just a measure of the dollar versus other currencies.
That's right. So I pulled up the DXY chart, and this is a daily time frame, but let's zoom out a little bit. So I drew what looked like a reasonable line to consider this particular point in time when it we had a very strong, and this is a weekly, yeah, this we had a pretty strong move, retest the level, and then it went on to climb the wall of worry all the way up to this very, very, I won't call it super high level, but I mean, let me put it this way. In 2017, when I was at the fund, we were talking about selling the dollar if it broke down below 88 on the index, because that would have signaled like, or that would have implied that the conditions were such that the path of least resistance was going to be lower. But that didn't happen. So we never in following the big boss's rules at that time, we had a big fat lazy stop down here, and we never got filled. And even to this day, what 5 years, yeah, almost, yeah, 5 years later, we still would not be short. And you can see that would have been a very painful couple of years trying to sell this price action here. But point is, there has been there have been or there's some strength in the sense that with the talk. You can say all the things you want about the U.S. dollar and why it might need to go away, but the reality is that when you're outside the U.S., the dollar is still way better than what others are able to offer. And with starting in 2021, when rates started going up, the dollar index, it put a lot of pressure on all the other currency pairs like the euro and the yen, the pound, the Aussie dollar, the Aussie and New Zealand dollar, and we had this big move up. If you had U.S. dollar denominated debt, your dollars got less, or your dollars had more power. If you had foreign currency debt, or if you're in a foreign country and your U.S. dollar denominated debt, sorry, I can't say that very well, got more expensive to service. So it creates a lot of pain. But anyway, sorry to jump off on a tangent, but this is what I'm looking at right now on the DXY weekly.
Yeah, and so I guess the reason we care, right, is because what we've kind of noticed over the past year or so, as the dollar is increasing strength, the crypto markets have taken a hit. So there's a correlation there, and kind of what we were talking about yesterday, and kind of the way I look at this, and this might not be right, by the way, but if the dollar wants to increase in strength, and that does have some temporary correlation with the price of Bitcoin specifically, why wouldn't I look at that as taking advantage of a temporary opportunity where the price of Bitcoin has gone down in US dollar terms as the strength of the dollar has gone up? I look at that as an opportunity to acquire an asset for the same amount of dollars relatively, right, and acquire more of that asset because of this. I don't know if it's temporary or not, but does what I'm saying make sense?
Yeah, I think that the like politically or globally and politically around the world, the it's what I'm trying to put together this thought is that there's a lot of talk about globalization starting to unwind, and that's all nice and fine and well and good. But the reality is that what began in Bretton Woods, and if you read Peter Zeihan at all, or if you know anything about Bretton Woods, you know that the Bretton Woods agreement set the stage for what became our modern day globalization, and it is very, 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 very difficult to unwind, no matter how much we hate people like Russia for invading Ukraine. They are still selling natural resources to all of the neighbors of all the neighboring nations, because the fact is those neighboring nations have to buy natural gas, for example, from Russia because they can't get it from anywhere else, or it's too expensive. And what I'm trying to communicate with that is it's very difficult. You can't just decide you're not going to trade with your enemy if they become your enemy all of a sudden. Like the Russians played nice for a while. Maybe that's not even the right way to say it. They hadn't invaded anybody for a while, and then they pulled this stunt. But I think it's a whole nother can of worms to talk about, geopolitically, what the Russians are out to do and what they're trying to do. Read Peter Zeihan's books if you really want to have somebody explain it like you're five. But the point I'm trying to get to is that the unwinding of globalization is going to take another decade or more, and the de-dollarization is still going to take probably longer. I don't think the dollar is going anywhere. Michael Saylor talks about this a lot, is that the Bitcoin open monetary network is actually the ideal rail for US dollars, because at the individual level, forget about what politically the Saudis might think of the US dollar, or people in Africa, like the warlords and the warring governing factions think about the US dollar, or what the Europeans think about the US dollar, or the Japanese might think about the US dollar. The fact is that on the ground, people are transacting in US dollars at and somebody fact check me on this. Individuals are transacting in US dollars they clamor to do so. And the reality, Peter Zeihan articulates this very well, is that if you're on the ground in Africa, your local currency is probably worthless. Or if you're in Lebanon and you're watching the value of your local currency get inflated away, uh, literally overnight in some cases, or year over year, or like the Argentine peso, you will do anything and everything you can to get dollars. And Bitcoin, because it's permissionless and there's no borders and can be sent like information over the air, like wirelessly to your, can then be traded for US dollars so that you can survive. This is happening at a bigger scale than I think many of us in the US or even other parts of the world understand. So it's what I'm trying to like circle back around to is what you were talking about, Josh, with the perception of a strong dollar. If that holds Bitcoin's price, if there's this wet blanket of perceived, or the perception is that a strong US dollar is bad for Bitcoin or bad for crypto assets, then that pressure that's holding price down in the next year, two, three, perhaps, it really, if you understand how money works, and you pay attention to what's going on in the macro universe, you'll understand that's actually not necessarily a bad thing if your time horizon's 5 to 8, maybe 10 years out, in terms of being able to realize some of the gain or some of the protection that something like Bitcoin offers. I mean, for here in the US, I mean, we have the dollar and we have access to things like Bitcoin and other crypto assets. But the point I'm trying to really like get down to is that the perception of a stronger dollar, if that holds down Bitcoin's price, just creates what some will call a generational buying opportunity. If you're able to plow into Bitcoin and your time horizon's long enough, then this is not necessarily a bad time. And I'll flip over to the Bitcoin chart and to show, the FTX event is the W here. The whoops, whoops, we got pwned in the Bahamas by SBF and FTX collectively. But there's this giant move lower has just been the perception or people's perceptions not being favorable, and the ability for bigger money hedge fund players to play derivatives positions short, so they're able to sell into the market, borrow spot, just like you'd short a stock. You borrow the stock, you sell it into the market, and then you buy it back lower and then return it. And so the conditions have not been necessarily favorable if you're really worried about trade. If you have to make your income from trading, you certainly wouldn't have been long during all of these like substantial moves lower. You'd be short because you're looking to make a living, and going the path of least resistance, the price had to go lower. But it's been collecting in the zones, and if we get back, I mean, I guess what I'm trying to communicate here is that as de-dollarization picks up, perhaps, I don't know what that really looks like. It's just it's a word that I know how to use. In some cases, I might not be using it right, but I think that the point I'm trying to get to is the price of Bitcoin is indicative of a couple things. One is it's still globally, it's fundamentally misunderstood at a large scale, and it is traded in the financial system, the existing fiat financial system. It's traded like it's a tech stock in many cases, or like a growth tech stock with there's no yield. That's Wall Street. Wall Street loves yielding assets, and but if you're educated, or you spend enough time looking at what Bitcoin is, how it works, where its supply comes from, what the future supply picture looks like, and unlike Jamie Dimon, who has gone from just calling it a Ponzi, he's graduated from calling it a Ponzi to saying, most recently, I believe it was at Davos, fact check me on that as well, but his biggest complaint or argument against Bitcoin was loosely quoted to say, how do you know that the supply is finite? And I was fascinated when I heard that, and I want to talk about this briefly, is that one of the things that when you start to learn about the financial system and you look at how companies issue shares and you look at how the Federal Reserve, you know, creates dollars, like adds to the supply, and how the tightening cycle, like an interest rate tightening cycle, is designed to extract supply from the system. And you look at this from a supply and demand perspective. In the fiat financial system, companies can issue shares, people can buy them, they can go into your 401k and they can be worth X. But most like retail investors, for example, don't understand that a company can just, within the rules that are like within the regulations, they can issue more shares for just about any reason. And that literally dilutes it adds to the supply and it dilutes the value of shares. Now, the Wall Street crowd know how to navigate this. They understand how the system works. And so I guess thinking more in that context, it wasn't really, it shouldn't have been that surprise for Jamie Dimon to really challenge this idea of how do you really know that Bitcoin, there will only be 21 million in total. And that's, he's not a he's not a software engineer. And that's a perception challenge. And, you know, I have to say that it took me at least a year, probably two, to really understand like how or what was happening when within the Bitcoin network. It started in 2009 and has been running ever since, and it has been slowly ratcheting back the amount of subsidy that gets paid out. And this whole concept of halving event was, oh, Josh dropped off. I got to get him back here.
I just
Sorry about
joined
that.
back in. I should be back. I should be back in.
Yeah,
Can you
you're
hear
back
me?
now. Yep, good to go. But I was just talking about Jamie Dimon and this idea of him challenging the concept that there will be a fixed supply of Bitcoin and it's only getting smaller every 4 years, the halving cycle or halving events, and the the way that the system, the Bitcoin, the network, it manages the supply of Bitcoin independently of a third party, meaning it polices itself. And I think a lot of people have a really hard time with that concept because it doesn't make any sense to them. Because in this fiat system, a company can issue shares any day of the week. They can dilute the supply anytime. Same thing with the central bank. They can issue more dollars. They can issue more pounds. They can buy. They can use the proceeds from selling bonds to then pull supply out of the system. So a supply and demand dynamic is very strong in my mind and probably in your mind when it comes to Bitcoin, because we understand that there's only going to be, or we believe that there's only going to be so many Bitcoin will ever exist. But that doesn't resonate or even make sense to the traditional finance crowd.
Well, and it goes to the point where people talk about, Bitcoin is a hedge against inflation or all this stuff, and that it goes back to supply and demand. And they say, well, the past couple of years, it's proven not to be a hedge. And you go, all right, well, over its 12-year history, to buy one Bitcoin, it costs you 23,000 US dollars, right? And so I would argue that it kind of has worked as a hedge over time. Uh, but with the supply, again, this is like stuff that really important for people to, you have to do the work to understand it before you can really decide if it's right for you or not, right? So you hear so many people where I get frustrated, and I'll just go on a quick tangent here with a guy like Jamie Dimon or some of these politicians. This isn't going to shock anyone, but they lie. Like, that simple. Like, this isn't like that hard to figure out. Like, the guy, there's no repercussions for him getting up there and lying about it, right? And so let's go back to our earlier conversation. There's no incentive for him right now to support it, and there's also no repercussions to lie about it. And so what's the guy going to do, right? And what are these people in positions of power going to do? This is how I look at it, and maybe it's a cynical way to look at it. And like, look, if he's up there saying something, the guy is very, very successful. Any of these guys, right? But the reason you or I or anybody who's been in the space for 5, 6, 7, 8, 10 years, the reason that we get so I guess, irritated by this is because we know it's not true. It's not factual. It's not right. And it's categorically, this isn't like an opinion. What he said is not true. Now, the regular guy on the couch or, at home doesn't know that because they just haven't done the work. And to do the work isn't some sort of like, you don't have to go to Harvard and get, spend 300 grand and have a physics degree to understand this stuff, right? It's just a simple understanding of how our money works, what the incentives are for the people in charge, and why there should be alternatives. And once you get through that, a lot of people come to the conclusion that Bitcoin is the best alternative, right? And so I guess where I get frustrated is like you want to scream and be like, guys, come on, this is just not true. But then like CNBC, you've got these guys on there too, and people follow those guys. And I can't tell you how many terrible, god awful videos I've watched on Fox Business, CNBC with crypto experts that know nothing about the space, like at all. I mean, it's almost embarrassing. But long way of saying that, like with all this stuff, these guys, there's no incentive for them to be truthful about this at all. So when you hear stuff, back to the beginning of the conversation, like the banks are choking off access to crypto. First off, like there's something called the Streisand effect. Like they're only going to make people want Bitcoin more. If that comes out to be 100% true, and digital assets more. And the second thing is the space moves so fast, we'll innovate around them, and we already are. So it's a losing game. I think what they're doing is they're buying time, and I think they're buying Bitcoin. These guys aren't sitting around watching all this unfold and not taking positions, right? I think they're kicking the can down the road. They're trying to say for as long as they can, because this system is up against the wall, and it could go on another 20 years. I don't know. Like I'm not here to say, I'm not a big enough expert to know that, right? But if you were to ask me just from a life experience thing, like what do you think is going on? I think they're buying the living hell out of it, and I think they're doing it while prices are low. I mean, we can talk about the 4-year cycle, and that we just went through a bear market, and like there's a lot of opinions about is the 4-year cycle real? Is this something that's going to be around forever? And I don't know, right? All I can do is, look at the past and make an educated guess on the future. If you were to do that alone, all you would say is, yeah, it's a bear market after a blow off top, and this is nothing this is nothing new, right? But with everything going on with the geopolitics and everything, you kind of have to put your thinking hat on a little bit, and going, okay, now we've got their attention, all right? So what is their response? And the game theory is you have to play, you have to get in, because if you don't, you're going to be left behind. I don't know. Again,
Interesting.
We're just trying to think through this, right? Like, and I don't know that anything I said is true. I don't know if it's not true. I'm just trying to think about this from a perspective of, not trusting these people, right? And if I was in their shoes, what would I do? I guess when they do have their bags fill, they'll come out and say, "Hey, yeah, we've acquired a position in Bitcoin," right?
That's
And
right.
maybe
I
that's
want
not
to point
malicious.
out something. I'm sorry. I didn't mean to interrupt, but before I forget this thought, let me throw this out there. Okay, when Bitcoin was at 68,000 or it's 60,000, okay, and the people in the Wall Street apparatus that were making the market for spot Bitcoin or derivatives products, what were they doing when prices were going up like this? They were happily giving people what they wanted to buy. They were just doing it was good business. If people want to buy Bitcoin derivatives products, we will sell. We will make the market. But what happened when things changed and sentiment took a dump and people started chasing, like the retail crowd finally got wind of Bitcoin at 64,000, and then everybody started buying, which I bought Bitcoin at $67,000. Not very much, but I was buying on that day, and I have the transaction records to prove it. But when you're buying as a retail trader, or you're buying anything, the question that I was taught to ask is why on earth is anyone selling? And I want to ask, or I'm asking this kind of a rhetorical question, is that as the price of Bitcoin came all the way back down to 36,000, and then from 48,000 all the way down to 18, and then from 24 down to 16, just below that, who was selling during this move down? It was all of the institutional types, all of the people that had been, or excuse me, who was buying when retail was panic selling? That's why I had it backwards. Like all of the people on Wall Street who were previously giving it away, selling it, selling it, selling it, were the ones buying when price was coming back down. So they've been the people that make the markets were accumulating all of the supply when price was puking. And you ask yourself, well, why on earth would they be willing to hold it if price is going down? And I think the answer is pretty simple. If you think about it, it's like, well, that's because they believe in the future they're going to be able to unload it for a higher price when the landscape change, or whether it's politically or it's public perception, sentiment, numbers change, economics, the perception of like the recession narrative. I think this pretty much says that from the time we started hearing about the recession is coming, inflation is here, there was a lot of selling, people puking, people getting sick, throwing up, selling their positions. Who was buying? All of the exchanges, all the people that make the markets were buying. That's how the markets function, is that somebody is on the other side. And one of the nice things about an exchange is that anytime you press the button, there's someone to buy, period. Even if it's like absolutely in the toilet, if it's worth anything above zero and you click sell, the exchange or someone making the market for the exchange is there saying, I'll take that, I'll buy that from that person selling on the other side. So why would the institutions, who really just at the end of the day, and something that the big boss told me once when he was sharing after I moved on, shared that he had started working with some crypto traders and said, we are chart agnostic. We only care about taking US dollars and turning them into more US dollars, and they will trade any chart. They certainly weren't buying at these levels. They were waiting for these types of events where heavy selling by retail and individual investors who don't work in the financial markets or work in the system and understand fundamentally how the financial system operates, and they're buying down here. And this W, like this support level between like 15.7, whatever it was, 15.6 and 17, this was most, I mean, me buying at 17,000 or 15,000 doesn't move the needle, but someone with $500 million that can move up into a substantial position can vacuum up enough of the supply to make the price go north again. And more importantly, the people that make the markets that have been holding all this during these big drawdowns in price are then able to start offloading the supply back into the retail trader's hand, or the like the Fidelities of the world, when they make it possible for 34 million of their customers to start buying spot Bitcoin. People that have been sitting on the supply, knowing that things like this are coming down the pipe, then they start putting that stuff on the exchanges to be able to sell, or they start making the market for Fidelity to sell and trend. Anyway, you understand where I'm going with that, I hope.
Yeah, I do, and I appreciate it. And one of the things I have to do, always check myself on, is like I have a tendency. My first thought is to be like, okay, this is some sort of conspiracy against Bitcoin. Like at the end of the day, it's probably not, right? It's probably just market participants trying to make money, and guys with information and institutions acting better than retail traders who don't have the same information, right? There's ways
That's
that
right.
we can, and so you and I have been able to be successful in this industry because there's certain strategies you can implement, because those things are outside of our control, right? Like we can't control what an institution decides to do on any given day, right? But what you can is, as what is it? We're a minnow riding a whale's coattails. I mean, that's all we are, right? We can't do anything to move this. There's we don't have the same information they have. What we know is, over a secular term, 5 to 10 years, the price is going up and to the right, right? And so how do you play that? knowing everything you're knowing. But I think it's also important to acknowledge some of the maybe people that don't have the same incentives for Bitcoin and the crypto industry's success, because I think it's something you have to watch very carefully as we are going through these adoption stages as the public is becoming more aware of what this industry actually is and where it's going. I think it's important to talk about and kind of give thoughts on, because like what you just told me, I'm sitting here going, okay, like these guys are, they're bad actors. Well, in reality, like probably most of what they're trying to do is the same thing you and I are trying to do. They're just better at it, right? Which is making money, right? And so I think that's important to always remember too, with especially with something that's like is highly, I don't know what the word I'm looking for is, you know, it's talked about as much as the crypto industry is today in regards to finances.
All right, I'm going to transition us over from the Nick Carter tweet to the Richard Galvin talk, or this gent, this fine gent named Richard Galvin, and transition us now to talk a little bit about these AI tokens. Speaking of things that are moving and they're probably getting a lot of institutional attention because there's lots of capital flowing. Let's talk about these. I'll let you lead us off there. I'm going to pull up some of these on the chart as well while you're doing that.
Yeah. So when we were getting ready for this, I said I wanted to talk about these, and this is something that you see a lot in crypto specifically is this stuff moves around at narratives, right? And so we've had a nice run up in Bitcoin. Bitcoin's kind of settled down. Now money is moving out of Bitcoin into some of the other, they're called altcoins, right? And so what you have to do here is just be really careful with, okay, let's look at what is this graph. Okay, so the graph, I'm familiar with the graph. The graph is a legitimate project. They're it's a Web3 indexing platform. They've got a team, they're building stuff. Okay. This one doesn't scare me as much, but the point I'm getting at is this entire niche within the crypto space is pumping, and some of these projects aren't real. Now, if you're trading it, it doesn't necessarily matter, right? Like you don't really care if you're trying to enter and exit. But what I think we have to be careful of, and you can kind of do a better job of articulating this than I can, is like some of these things have moved up 100, 200%. If you're just getting into this and you're looking at this stuff and you're going, holy cow, like these AI coins are going nuts, like the chances of you jumping in now and doing a trade and making money are probably pretty slim, right? And so you just want to be careful. Maybe you can point at some of the things to look at. Maybe I'm wrong, right? Maybe again, this is, you have to think about time frames and what your objective is. But these things have pumped pretty hard. I don't know that there's a whole lot left. But again, this isn't something, the charts and all that stuff. I'll defer to you, Ted. What do you think on this?
I'll start with the graph. So looking at the tweet, with GRT as the symbol, you look at it says in the last 7 days, it's up 90%. Okay, let's take a look at the chart. And I will flip over there. So this is a daily chart of GRT, the graph. Okay, and the thing that I'll go back in time a little bit. There was this dude, and I can't remember his name right now, but he was just some dude in Santa Monica, kind of like a surfer dude, like, hey man, if I'm not trading low float biotech stocks, penny stocks, OTC. If I'm not doing that, then I'm out surfing or I'm waxing my surfboard because life's a beach, and I'm a swing trader. So this guy sold a service, but had some training that was relatively inexpensive. It was only a couple $100, and so I consumed some of this content. And these, like when I look at charts like this, this is amazing. This was 7 years ago. What is it? What year is it? It's 23 now. So like 2014, 2015. Maybe it's 8 years. I can't do the math. I was told there would be no math. But what I'm trying to communicate here is, I look at this chart and I see the rate. Like I'm gonna push that off to the side, but you see the range, the price action is in this range. Like these candles, these daily candles are not like really that. There's not a lot of price movement, and you get volume comes in, the price moves up, but then it gets sold. Like the thing I'm trying to articulate here is that when you zoom out a little bit and you see how much volume came in to this particular instrument in the last, what, 30 days, 40 days, something like that. Basically, since the beginning, it's almost like it's almost like somebody waited until January 2nd to like start buying this, which is what it. I mean, you see, like what the heck? The point is that the swing trader types would look at this, or this particular dude being a swing trader type would look for these like really short range candles, and he would make some assumptions and then set some alerts, and then something would happen. He would get of that first day of volume. What I'm trying to communicate here is that you need to be looking at these charts when they're ugly. And I mean ugly, because I can tell you, if I move this off to the side and you showed this to me now, like assuming that I just learned about this right now, I would say this thing looks like crap. It was trading up here at $1 back in 21. It's now 6 cents. This looks terrible. But I would also say now's the time that you look at how long has it been terrible? Well, it's been in this channel for a year almost, or 9 months or something, back to what, May, after it broke down. Like this basically looks like 25 cents was like a pivotal make or break level, and it barfed and has traded sideways. And this is what the institutions look at, because when you zoom all the way out and you see that this thing used to be up at $3 and now it's down here at what, 4 or 5 cents. The rationale is that if you're taking a trade at 216, the risk reward is not in your favor because it has only ever run this far. So if you're long, you're probably going to hit some resistance here, but it has all of this room to fall. So the reward portion being here is like 3 times the risk to zero. So they wouldn't take that trade. They're looking for something that has found what looks like a pretty substantial support level. And they would be looking at the risk reward here, say, well, if it's only 5 cents, that means it's only 5 cents of risk to the downside, meaning the price only has to drop 5 cents for it to go to zero. I can watch for some movement, or I can look for volume coming into this market, this particular chart for GRT, and I can set some stops maybe above the market, that if there's enough volume to pop the price up and it starts to get attention. And now you can see that it ran from, so on the 1st of January, it was 5 cents. It's now 7. So it's literally, like, in terms of price appreciation, it's 3 times the price now, 3 point some percent, or three times the price. And if you were trading derivatives of this token, like for example, like on Binance or KuCoin, if you were trading futures for GRT and you were short in your futures trade and this started to rip, you would be getting either liquidated or stopped out, and you'd be probably looking to load up long. But the point is that all this volume came in really quickly, and so there's probably been a substantial amount of capital just waiting for some sort of catalytic event. And as it rips higher, the bigger the institution, the more they can put, the larger position size they can put on. They don't have to wait for the price to go back up to 25 cents to make a reasonable profit. But the point I'm trying to make here is that the risk, taking a trade at this level in the like 5 to 10 cents level, price zone here, the risk reward is way better, because if this can, let's say this is the beginning of a short squeeze, and the next resistance level is at basically that 25 to 30 cents range, then putting on a trade here with a stop either right above zero, at zero, and a rightly sized position that doesn't wipe out your entire account, then you can let this ride all the way up here. And then if it pulled back 50%, you could cut half your position. Then you've made your initial investment back. You're now playing with market money, and then you can let this ride. And if it went back to zero and you end up giving all the market money back, that's okay. But that's the kind of like speculative or this is from my experience working with institutional types that are just looking for the right setup and right risk reward and the right level of despair, because down here at like 4 cents or whatever, yeah, hold on, let's see, yeah, basically at 5 cents, or yeah, basically 5.5 cents was kind of this level where it wouldn't go any lower. So we had a bottom here, a bottom here, and a bottom here. So you can technically call this little zone right here a triple bottom. And triple bottoms mean some stuff in the trading world. Doesn't matter what the chart is. And then boom, you get this move. It took out this other like significant level here. Now and Josh, I'll say it again. These highly contested areas of value at previous times on the chart, it shouldn't surprise anyone that price, when the wet blanket came off this one and it got above 10 cents, a lot of volume came in. But where did it stop? It stopped at a previous resistance level and people took profit. And now the people that missed the move because they weren't looking at the terrible looking chart from before, as I was describing, now they're getting their attention, or this move higher. And back to the tweet with the examples here, the graph being the one that's moved only 90% in the last 7 days. It people then get on their trading platform and they LARP into this at 17 cents and they wonder why it hasn't gone to 35. It's because all of the supply that they were buying with the $500 or the $100 or the 20,000 that they plopped into this, or if they're like 10x or 100x levered, when it corrects, they get wiped out and they wonder why. It's because you missed the move higher, and there's only so much energy that can go into. Oh, I got to switch back over to the chart. Forgive me. I'm still learning how to drive and talk at the same time. So if you miss this impulse, this leg up, and like the way that remember, this is hindsight, and it's easy to say, oh, well, I knew this was I didn't know this would be a bottom. I didn't know about this chart until today. So I would be sitting out waiting for it to come back at least halfway between this level and say this resistance. It'd have to come back at least halfway to signify that there was some support. Again, this area of value here, it wouldn't go up or down really. So if it pulled back to 10 cents or even like 11 or 12 cents, that might be a reasonable risk reward where you could risk 1 unit to the downside and then have it probably 2 to the upside. Maybe 3 if it really ripped. I mean, if it really continued to get the attention. So there's these impulses. The initial impulse got us above this 10 cents, and it got us to 13 cents. Collected briefly. This is a daily. So for a whole day, the market couldn't make up its mind, and then it finally shot through, and probably ended up flipping a lot of bias from short to long. And we don't know this now, but if you look at the chart, and a lot of people who are trading look at the charts, they say, well, if I'm looking for the next resistance level, it's probably in this like 25 to 30 cents. So if I'm taking a 2-to-1 risk reward trade, then I would long at say 10 to 12 cents. Maybe I'll be aggressive and say 15 cents, okay? Because this other support level is 50% of the way through this last congested area over here. Then if I set a stop to get long at 15 with a 1R downside and maybe 2.5 to 3 upside, that's a worthwhile idea if you share that bias. If you don't share that bias, you're going to think that's crazy, and you may want to take the opposite side of that trade and sell it short. So that's my chart. That's my chart analysis of the graph, and like why you should sit this out.
No, it was good. And so I think it's important to clarify too. And this is where there's a difference between when we trade, which is exactly what you're talking about, the tools we use to trade, versus looking at some of these projects. So what I've historically done in the past is if you would go back to the very beginning of that move up, right? So what you watch for over the course of these bear markets is some of these projects that we're in the 5 cent level. I mean, that's where, where you're not necessarily doing a 1 hour trade short term for income. That's where you kind of look to, and again, this is hindsight. Nobody gets this perfect, but like, you acquire a position in this coin over a year or the last 6 months with the expectation of exiting, after a 3 to 5x move, right? And that's a little bit
Hmm.
different than what you just discussed, right? And so we're going to go over both, but in my mind, I'm laughing because it's just like, this what you're saying makes 100% sense. It's important to have it, I guess, compartmentalized in your brain what exactly you're doing, right? Before you make your moves.
Look at this line I just drew. So 2021. So almost a year. Saturday, February 6, 2021. That's almost. So if I move over one day, it'll be 365 days ago. This was setting up to rip to its high, and then without knowing this ahead of time, the price came and went into this chop solidation lower, back to this. So if it was ripping at $1, it came back down to half of $1. Strange that we took a whole unit and we stopped at the half after all this consolidation and chop. And then we had this impulse and thrust back up to this previous level that we're able to draw this line. And then there are two, three, basically three, I'll call this three times where price action behaved according to this line. Again, the line wasn't there when this chart was forming, but we can form the line after the price. Like, this is all people's behavior being expressed and how they're putting money to work or not putting, or taking it out, like putting money in and taking it out. And then once the range settled and got into this lower channel of this channel here, this is where it has basically settled, if you want my opinion. So it's settled here. Now, to talk more about this in terms of a longer term bet, it's now 2023. If you think that the graph is going to, oh, it looks like our stream is reconnecting. Damn.
I could
uh,
still see it on. I could still see it on my end.
okay, good. All right. Anywho, we'll get these technical things worked out. So this channel, I need to mute again. Okay. The back to the chart. I'm trying to find my tools here. Here it is under drawings. I want to draw a rectangle. So this box represents this is a long time for people who are trying to scalp
Hmm.
and make short-term money. This is a long time for them to sit and wait. Like, the opportunity cost is an issue, whether they're aware of it or not, it is. So they'll put on these trades, they'll get, wiped out, or they'll get bored and they'll move on. And it's like the saying that's always darkest right before the dawn. We see that all of this, for any number of reasons, all this volume comes in because there's a good narrative, and then we blast off, and poke through this like upper resistance level that is. I'll move the box down a little. So basically, the top of this purple box. So this signifies a momentum change, a directional bias shift potentially, but a momentum change in the other direction. And now you can, because you don't have anything else to look at, you can't see inside people's heads in aggregate. You've got these other areas of the chart. I mean, and just take the whole thing about moving halfway back. So half of this move, so it's 280 down to 20. So eyeballing it, I would argue that the risk reward is decent from a longer term setup if you were to pile into this with the appropriate position size, that if it went back to 5 cents or went to zero, you didn't get wiped out. But in a year, two, maybe three, probably a year, if things are really shaping up for this thing to rip, it could easily hit the $1.30, $1.40 target because it's kind of the middle of this congestion over here, or highly contested in terms of like what this thing was worth. But if the right ingredients are there from a narrative, like the narrative is good and the market sentiment is changing, and there's really what moves the needle is that there's enough capital, there's enough excess capital in people's trading accounts that they're willing to express a trade and take a position, then you might you might make this a long term, like a year long, 12, 24 month. Oh, man, it's muted
Yeah,
again.
and we can
So
and
anyway,
we can yeah, we can talk about different strategies for that, but that makes a lot of sense too. And I think also, I mean, that also gives people an idea, of where to take some profits based off kind of general, the chart in and of itself. And so that's just another tool people can use when they're deciding to maybe take their original investment out if they want to let it ride. And it's I guess it's like you always say, there's a confluence of things, right? We have to look at where we are in the total market structure, what's going on with the macro, what's going on with global markets, what's going on with traditional finance, where's the crypto market in general. And so you take all those things in aggregate and try to develop a thesis on where you think the market's going to go and make decisions based off, the things you just laid out to help you kind of get an idea of where they could go. Uh, does that make sense? I guess I'm just trying to think through it out loud of
yeah, I
where
would.
and why this kind of information is valuable.
To me, there's an infinite number of types of market participants, but I think maybe like a way to simplify, like the way to talk about market participants, there's a couple camps, maybe two camps to start. Is that you have like your short term, like I'm a trader. I don't intend to hold any of these things more than just a few days or a few weeks, and I will cut any position that goes against me in order to preserve capital, even if 10 minutes later I get right back in because the price action moved and the president blinked, or Santa Claus showed up on Mars and it meant that the risk was back on. So that's one type. I'll call them like short-term traders. They're looking to like settle and be flat, meaning in cash only, like at the end of the week, at the end of the month, or at the end of the quarter, because they follow a certain set of rules. Like if you work for a fund, like you have to be trading because that's literally where you generate your income. Uh, so, but if you're thinking, so then that would be a trader type. If you're more of a like a venture slash investor type, and you're looking to take a position that you're willing to wait 3 to 5 or even 8 years to develop, and meaning you're looking for like a 100x return or a 10x return or 50x return, and you're willing to give it time with the understanding that I'm going to build a portfolio of these like longer term speculative bets. 60 of them, or 60% of them will probably not be worth what I'm looking for. And the same approach when investing in startups, like the Y Combinator knows that 60 or 80% of their projects aren't going to exit 10 or 20x, but the ones that do are going to more than make up for all of the money that they invested to get all of those into that particular cohort, for example. So if you're building a portfolio of tokens that have some sort of utility, I mean, and I would argue that maybe the first thing to do, again, I'm kind of thinking out loud here. If you're looking at like this AI trend, and you think that there's going to these utility tokens are going to have much greater value because they're not understood today, or the way that the general public is going to consume the product or service that uses these tokens to make them function. How, again, assume that that's all correct for a second, then you might not necessarily care that you're taking a position at 40 cents versus 39 cents, but you know that in 3 years it won't matter because your information suggests that this thing is going to take off if the following conditions are met and you're comfortable with the risk. and you don't care if it goes to zero, then that's another camp, in my opinion.
Well said. Yep. Nope. And I think it's important to distinguish between the two. Different people have different objectives here. You know, my personal objective is to do both, to learn how to trade, to make an income, but also with that income to invest in venture products that, you know, and venture, look, like these are crypto tokens, utility token, whatever, you know, some people might take an issue with saying that they're venture investments, whatever, right? Like it does, it's an accurate term to describe kind of what you're doing. I believe that, you know, value will accrue to some of these tokens over time. That's the bet that you're making when you do this. Whether or not that's true, the market will decide over time, right? So uh, you know, that's the approach that I
Yeah.
take in. And sort of what I found too is from my personal experience, I'm not a good trader. I'm optimistic that, you know, as we continue to do these, I'll become a better trader. So the only strategy that worked for me was to buy and hold. Now I will tell you that strategy is fucking terrible in crypto because you spend 2 or 3 years holding this shit that goes down 90%, right? And so, but what you mentioned earlier, in the last cycle, I had two or three that more than made up for it. So it doesn't ultimately matter, right? I was right on two or three picks that, you know, covered it, right? And so it doesn't matter if these other venture bets go to zero, it's irrelevant. But there's just no reason other than tax loss harvesting to sell these things. So, uh, you know, part of what I want to do to be an objective venture or to be a better investor in crypto is, you know, learn where to take some profits, get my original money out, whether it's trading or venture investing, right? That overall conservation of capital, because I think that's where people get hurt is that they lose US dollars when, you know, a couple well thought out strategies and rules can prevent that, right? And so,
Yep.
you know, where I don't think you or I are going to give people advice on which tokens to buy. What we can do is present some ideas and strategies to mitigate uh, loss of capital, right? And I don't think we get in any trouble with that because take it or leave it, right? Like, you know, I'm not telling you to buy the graph. I'm not telling you to enter at 17 cents. I'm telling you if you do, then set your stop loss here and you'll lose 1%, you know, or, you know, take it, you know, if it runs up 10x and you pull your original money out, you're riding market money, right? So I think that's more of the
Hmm.
objective we're trying to do than anything else.
Yeah. To put a bow on that is that if you're, I think the thing that say one of the things that helped tremendously when watching people take real, I mean, huge positions in uh, what's called a non-deliverable forward. It's basically like a futures contract against a currency pair, like the Chilean peso versus the dollar, for example, or uh, you use the spot price as the marker in a manner of speaking, and then you write a derivatives contract that says I want to enter into a trade with a counterparty. Talk about taking counterparty risk. I want somebody to enter in this trade, a counterparty to enter with me, and we're going to bet that the price of the US dollar Chilean peso goes up, and we're going to use this spot price reference, and we're going to let the price action in the spot market determine who wins or loses. And the thing I'm trying to communicate here is that we constantly looked at like where trying to understand like in the trading context how the question was always okay, that sounds like a great trade idea, but how do you know when you're wrong? And it was
Mhm.
usually the answer was pretty simple. So it was like, well, I'm wrong if the price comes back below um, in this case, if the price came back below 8 cents, I'm probably wrong if I'm long at 18 cents. And if it came back down here, then people are probably looking at this as resistance level now. And if they're taking short, if they're shorting in like the KuCoin futures, for example, they're shorting GRT USDT, then they're looking for it to go back to 5. They're probably going to take their profit here. I mean the chart helps paint a picture of perception, and the point I'm trying to make is that you want to be asking yourself, how do you know when you're wrong? A lot. and you can make some basic assumptions based on where the price would have to pull back to uh, before you said, okay, I'm wrong and I should get out of this trade, and then reevaluate where a better entry would be. So circling back around is just using these diagrams, these fancy boxes and straight lines and whatnot, and arrows and funny drawings to say, how do I know when I'm wrong if I'm long in this particular leg of, or if I'm long at this price based on this chart, how do I know when I'm wrong? And being able to answer that is a good place to start at a minimum,
Yeah,
in
and
my
well,
opinion.
and you want to know when you're wrong because you want to learn how to exit the trade and preserve capital, right? And that's at the end of the
Yep.
day, because you don't want to sit on these things and watch them go down to 1 cent, 2 cent, then you're stuck in the trade or you've lost all of your trading capital, right? And it's just it's yeah, it's impossible to come back after that. So, all
Yeah,
right, man. Well, I
without,
think we've been going for
depositing more.
yeah. So I think we've been going for like 90 minutes today. I think we can wrap it up. Maybe tomorrow, instead of going for an hour on just tweets and news, we could just get into charts and
Okay.
uh, we can start with a little bit of that, and then because I think it's valuable. I mean, I certainly learn when you go over this, and it helps me kind of form. And I think we'll have it. I think we'll have two types of audience members. I think we'll have people that enjoy the philosophy and psychology behind it, and then we'll have the people that really enjoy getting into the charts. And I think, we can talk about this offline, but a strategy to look at is maybe doing some YouTube shorts with different trade setups, or alternatively, the educational aspect of it, both from a psychology and philosophy standpoint and a technical standpoint. Uh, but uh, so far, so good. I think this is a great conversation.
Yeah, man. I'll leave us on our most favorited scene here is our reminder that you should always be doing your own research. Make sure you're aware of any counterparty risk that you're taking. If you're using an exchange that's in the US, you're probably in good shape because they're heavily regulated. If you're using an exchange that's offshore in any capacity, just be aware and do your homework. Be diligent. We hope this was helpful. I hope this and broadened your mind in some way. And we'll see you in the next one.